Hi, good day. Today is the 14th of September 2009 and here we are with the Forexserve update on Forex and Treasury. It's been a long time since we put up this report, primarily because the markets were just moving sideways for many weeks now, and we were being repetitive, talking about the same thing back and forth. We thought maybe we'd give it a break, and now something important has happened, and I think we should look at it seriously about the implications thereof. What has happened recently has been that risk aversion, which has been the major play, has reduced to a great extent, because the numbers both from the American segment as well as from Europe have been increasingly positive. China has also shown signs of revival, and many other parts of the world. And the G20 also reaffirmed that the easy money conditions should remain for some time, and they would do everything in their powers to ensure that this recovery is smooth and sustainable. So that was a shot in the arm for the dollar bears last week, and we saw markets moving strongly into riskier assets like the Australian dollar, the New Zealand dollar, gold, oil, and what have you. And on top of that, we saw a very good subscription of the US Treasury. So in all, we saw, because of that, the US yields falling. And we've always noticed that when US yields fall, the dollar also goes through the floor. So it's not a surprise that the dollar is now at a one-year low. And I think the week, in retrospect, is an indication of possibly some kind of misplaced, if I would like to call it, optimism about the world economy at this point of time. So while things look good, it may not be for a very long time, and our prognosis is that there could be a second leg to the deflation that we've seen. But when and how it's going to happen is something that one has to wait and see. And what the impact of that is going to be on the currency markets is another matter. But in all, one could surmise that if we do see signs by, let's say, October, November, end of October to November, of there being some sort of easing, in that case, we will notice the dollar again strengthening, and technically the concept of a B wave having ended and a C wave having started would also be fulfilled. So in a nutshell, one should be guardedly dollar bullish at this point of time. We're not saying that one should sell the dollar or buy the dollar rather, but one should be wary about being or going overboard. On top of that, we would say that there could be a time coming in a few weeks, or maybe even in this month sometime, where one would need to look at hedging long-term USD loans for the longer period, because I think the yields have come off quite a bit, and it makes sense to hedge it sooner than later. Thank you, and have a great week ahead.